Welcome back, SF Live here on site. I'm joined now by John McConnell, President and CEO of Victoria Gold. And we just toured the Eagle Mine, the Eagle Gold project there in Yukon. And I'm quite excited to be back in Dawson. It's been 2 years since I was out here. Really appreciate the invitation, John. Thanks for having me. It was a fantastic day because the last time I visited Eagle was 8 years ago. And once I've uploaded this video to YouTube, I'll see if I can find some photos from 8 years ago and see how it started, how it is going. I like those comparisons, so I'll see if I can find those and upload those as well, because it's been quite impressive standing where we stood 8 years ago, and now everything's completely changed.
And we did go to the exact spot.
Exactly, exact same spot. So it was really cool. That's why I want to find some photos. I should have some somewhere on one of the hard drives. And like last time I was there 8 years ago, it was just a camp. It was a pretty bad time. It was 2013, 2014 or something. It was just you and a colleague of yours in that big camp, and everything was quiet. And
yeah.
I remember that, and now you're producing about 200,000 ounces a year.
Yeah,
so just quite a bit of a change. But let's talk a bit more recent history of the company. You're a producer now, so we have to talk quarterly production. Run us the latest. They only came out 10 days ago, I think. So run us the latest quarter and some of your guidance there.
Yeah, I mean, our quarter, some shareholders were disappointed, but for us, we were right on our budget. Because we don't stack the two coldest months of the year, we didn't stack the two coldest months of the year. It makes us a seasonal operation, and as we start stacking over time, the amount of gold produced comes up. But no surprise that May, June were lower months of production, but I think we'll surprise a few people here at the end of September when we publish our production in Q3, and then Q4 will even be higher.
Fantastic, like 55,000 ounces in the first 2 quarters, and the goal is to reach about 180,000 by the end of the year. So every quarter is going to be as much as the first 2.
That's right.
So that's quite impressive. How are you achieving that? Just do you have some more detail? I know you did stack in the coldest months. I'm assuming January, February.
Yeah.
So
heap bleaching has its peculiarities, but it's pretty simple. You put the ore on the pad, you get it under leach, and the gold comes out. So the key is getting tons on the pad, and we're above our targets so far this quarter, and are very comfortable that we'll continue to do that for the balance of the year and into future years. We did a lot of upgrades in the fourth quarter of 2020 and the first quarter of 2021, and those are paying off very well. We had trouble with wear on some of the chutes and things like that, and we upgraded the lining systems, and that's addressed the problem.
Okay. All-in sustaining costs were fairly high though in Q2, meaning $1,450. I remember in the press release roughly. Cash costs themselves were only $775, so there was over $700 in sustaining capital that was spent in that quarter. Can you elaborate on that a little bit? What did you spend the money on, and do we have to expect the same number in Q3, Q4, or is that done and dusted?
Yeah, no, most of that work is done. There was, some of it was still related to the upgrades of the plant, but mostly it was a truck shop that we're building now.
Okay. We're driving around that.
Yeah, so we had planned to build it last year, but with COVID it was impossible. So we had to delay another year. So that was a cost that got moved forward, but wasn't originally planned in the feasibility study for 2021.
Okay. One of the questions I actually asked Paul, because he was riding with me in the car as well, I find it interesting because the feasibility study is always different than the end product. What were some of the biggest differences? And that's more of a general question. It's like, what can investors also take away from that? Like, what have you changed? What has changed from the feasibility study? Because it's not a dream sheet. The PA is the dream sheet. Feasibility is usually it's supposed to be fairly accurate, but once you start building, the game is different. It's a different ball game. Like, what were some of the main differences maybe from the feasibility study?
Well, I think feasibility studies should be plus or minus 10%, and we used all the plus, and that was mostly related to geotechnical issues, and it's always hard to get a good understanding of that before you start digging the ground. I would say the other areas, I think any junior company takes the cheap route, and because if we had said the capital cost was going to be 700 million, we probably would have never got financed. So we cut some corners, and things like a truck shop.
Yeah.
Most companies would put a truck shop in right away.
Day one, yeah.
We had brand new mining equipment, so we took the risk that we would need a truck shop right away. And by and large it worked, but I fully expect we'll have much better availability going forward.
Yeah. No, interesting. Because also general comments like feasibility studies never resemble the final product as well. It's quite interesting to see then on the ground, because one of the questions I asked, like Paul, is like truck shop year 2, but he gave me the answer as well. Like usually major maintenance for the trucks is usually after 2 years, where you have to change motors and things like that, right? So exploration side, let's talk about that real quick. I think mine life is still quite 10 years, roughly 10 years to 11 years. What are you doing around exploration? I know Paul has been quite excited about a couple of areas.
Well, there's 2 things. We have a project we call Project 2040, and that's drilling Eagle off in depth. Certainly, when we did the feasibility study, we based it on a gold price of $1,250. If gold remains at 1,800, much of that ore at depth becomes economic. So we've now drilled, I can't remember, I think it was 12 holes down to 850 meters, and that would double the life of the mine, so add another 10 years. Regionally, we're very active. We have a budget of about $12 million, and we're focused really on another granodiorite intrusive out to the east, which has very similar characteristics to we made a new discovery there 2 years ago called Raven, and we've currently got 3 drills working at Raven, and Paul tells me he expects to have a 4th going there within the next couple of weeks. So, our goal this year is to have a maiden resource by the end of the year. It's, similar metallurgy to Eagle, but is multi-gram intercepts we're seeing. So you add ounces very quickly,
right?
Yeah.
So adding ounces is actually a good point. Let's talk about Project 240.
No, Project 250.
250.
Another one for the team. And, we've seen a lot of things. As I said earlier, we don't stack year round. But now that we've got 2 winters under our belts, and we've seen what they've been able to do at Kinross's Fort Knox mine, we're pretty confident that we can get to year round stacking. Yeah. So that alone adds roughly 30,000 ounces per year. The other thing that we found since we've been mining, and this isn't something you put in a feasibility study, but there's a large shear zone that runs through the center of the deposit, and generally it's a little higher grade, but it fractures very finely. So when we drill and blast it, we open up the pattern, but if you open it up too much, you get big boulders. So we close it back in a little bit, and then we get very fine material. So we think there's an opportunity, we know there's an opportunity to screen off that fine material and direct haul it to the leach pad without going through the crushing system. And that would allow us to put another 20% roughly through the crushing system, adding another 30,000 ounces per year. So that gets us up to 250, probably closer to 260,000.
Without any additional capex either, because it's run of mine.
A little bit of capex, because we'll have to put in another screening plant. And, conveyors to feed it. So it's probably less than 20 million in capital. But,
fair enough.
I haven't done the economic calculation, but it's, to get an extra 50,000 ounces per year for 20 million in capital, I'm sure it's going to have a very high NPV.
Okay, we got to talk capital structure. Like Core recently bought into the company. They bought from Orion. They bought a big block, 17.6%, if I'm not mistaken, and they haven't been to site yet. That's my understanding, because this is the first site visit that was possible actually in the last 2 years. Can you comment a bit, like why did they buy into it? Like what's their interest? Can we speculate there a bit?
Yeah, I think, they're very interested in Eagle. Let's face it, plus 200,000 ounce producer, safe jurisdiction, with, lower quartile operating costs. So, we've had a lot of interest from mid-tier and senior companies, and, since Coeur, in a sense, came in through the back door, talking to Orion and not us, we've opened a data room and invited Coeur and a number of other companies to sign CAs and do some due diligence on Victoria.
Let's try to comment a bit more generally. Do you see more activity picking up in that direction, like M&A in general? I know it's like investment bankers. There's a group of analysts here on this tour as well. Like, is there more activity on the M&A side in general in our sector, or can you comment on that? Like, do you see that, or is it just mute because it's summer and nobody cares?
Yeah, I think it's mute.
Okay.
I think, big companies like Agnico and Barrick and Newmont, they've got teams of people that's their job, is looking at other opportunities.
Yeah.
Companies like Victoria, now we have the cash flow that we're starting to look at other opportunities. So, our scale of operation is probably a little different from Newmont or Barrick's, but again, 10 years ago or 12 years ago now, Eagle was, an idea.
Yeah.
And now it's a big mining operation.
It's fantastic how far you've come. Seriously, like, congratulations on that. It's been fantastic to see. Like, as I said, last time I was here, it was 8 years ago, I got to visit Eagle. Fantastic. Congratulations, John.
Thank you.
Thanks for inviting me. Really, really appreciate it. It was great catching up with you.
It's good catching up with you. We should chat more often.
Definitely. No,
I do watch some of your broadcasts, so I get a lot of information from your broadcasts.
Okay, I appreciate that. That's good. Like, audience is growing, we're expanding. So,
and I know our business development guy. He's a part-time business development guy in Toronto. He watches them all as well.
Okay.
Because I know he forwards me summaries of things.
Oh, okay, fantastic. I appreciate that. That's good. See, that's good to know. Make sure to follow us on Twitter and YouTube as well, and to make sure you leave a comment, leave a like as well. What do you think of Victoria Gold? Do you have any more questions? We're happy to follow up with John as well. Live from our site visit, John McConnell, President and CEO of Victoria Gold. Thanks so much for having us, John. And,
Thank you.
Have a good night.
Great.
Thanks.